Welcome back to the sixth lecture of financial accounting course. In today's lecture, we are going to continue what we started in lecture 5, which is the analysis of financial transactions. In the last lecture, we discussed 10 financial transactions. In today's video, I'm going to continue to write the financial transactions, and we will have a detailed analysis of these items. So let's start with the first transaction of today's video and the 11th transaction in total. He returned goods to Mr. Afzal worth rupees 10,000. He returned actually defective goods. In this transaction, goods purchased from Mr. Afzal, a supplier, have been returned to him. So there will be a reduction in the amount payable as liability to Mr. Afzal by rupees 10,000. The two changes are: number one is decrease in goods or increase in purchase return. It means that decrease in expense by rupees 10,000, and the second effect will be decrease in creditor Mr. Afzal by rupees 10,000. That is the decrease in the liability. Okay. The 12th transaction is goods returned by a customer worth rupees 5,000. In these transactions, goods sold to a customer have been returned by him to the business of rupees 5,000. So there will be a reduction in the amount receivable from Mr. Naim, which is a debtor, by rupees 5,000. And the two changes are decrease in debtors by rupees 5,000, which means that decrease in asset, as the debtors are your assets. And the second change is increase in goods or increase in sales returns. In other words, decrease in revenue by rupees 5,000. The 13th transaction is cash paid to Mr. Afzal, rupees 28,000 in full settlement of rupees 30,000. Now this is an interesting transaction. The amount which is payable to Mr. Afzal, a creditor, was rupees 30,000. In this transaction, it is assumed that a payment is made to him before the due date, and that is why our company is receiving a cash discount of rupees 2,000, which is a kind of revenue from Mr. Afzal in full satisfaction. We mean by paying him rupees 28,000, the liability is settled in full. There are three changes in the transaction. Number one is there will be a decrease in cash by rupees 28,000, which is an asset. So there will be a reduction in an asset. And the second change will be decrease in creditors, which is a liability, by rupees 30,000. As we have no longer pay Mr. Afzal. And the third impact is there is an increase in discount received by rupees 2,000, which is a kind of revenue. By paying rupees 28,000 in settlement of rupees 30,000 means that the creditor is allowing us a discount of rupees 2,000. So this is an interesting transaction. The next transaction is number 14, which says cash received from a customer rupees 44,000 in full settlement of rupees 45,000. This is a this is an opposite transaction to the 13 number. The amount receivable from a customer was rupees 45,000. In this transaction, it is assumed that Mr. Naim is paying the customer is paying his debts before the due date, and that is why Our company allows him a discount of rupees 1000, which is a kind of expense or loss to the company. In full satisfaction, we mean by receiving 44,000 from him, his account is settled in full, which means that we say our customer that we we are closing your account by receiving 44,000. There are three changes in this business transaction. Number one is increase in cash by rupees 44,000, which is an asset. So an asset is increasing. The second effect is there is a decrease in debtors by rupees 45,000, which is an asset. So the asset is decreasing by 45,000. And the third impact is that there is a discount allowed by rupees 1000, which is a kind of expense. The 15th number transaction says cash withdrawn from bank for business use, fees 50,000. Now the two changes are in this transactions, or there is an increase in cash balance by rupees 50,000 because we withdraw the cash and keep it in our business. And number two, there is a decrease in bank balance rupees 50,000. So both are assets. One asset is increasing, which is cash, and the other asset is decreasing, which is the bank balance. The 16 transaction interest is paid on money borrowed from Mr. Salim, fees 5,000. The two changes in this transaction are there is increase in interest expense by rupees 5,000. Remember that the interest paid on a borrowed money is an expense for the business. And the second effect is there is a decrease in cash by rupees 5,000. And as you know that cash is an asset for the business. Transaction number 17 is cash paid to Mr. Salim rupees 20,000, which is a repayment of borrowed money. The two changes in this transaction are there is a decrease in cash balance by rupees 20,000, and cash is an asset, so an asset is decreasing. And the second change is there is a decrease in creditor, which is Mr. Slim by rupees 20,000. A creditor is a liability, so there is a decrease in a liability as a result of this transaction. Okay. So this is the today's lecture. In this lecture we have discussed 7 different financial transactions, and we have analyzed the effect of these 7 transactions on the books of accounts. So if you are new to this video, you need to watch the first 5 videos of the series on the course of financial accounting. So that's it for today's video. In tomorrow video I will continue to analyze some of the financial transactions. Until then, take care. Goodbye.